Dow S&P at all-time highs, NASDAQ up big. Who better to talk to than the market's grand poobah here at Reuters, Dan Burns. What are the markets throwing their arms around today, Dan?
Well, it looks like they're all jumping back onto the bandwagon that Fed tapering is not going to happen in September, moving back into December, probably time frame. And then we're coming around to that view too. Listen, the Fed introduced 3 key points to yesterday's statement where it talked about risks from mortgage rates rising. It described the economic growth as modest rather than moderate. And it also talked about persistently low inflation. They're going to have to lower their tendencies forecast at the September meeting. You're not going to lower the forecast at the same time you'll let up on the stimulus.
Okay, but we saw that actually the S&P crossed 1,700 today, so big milestone day. But we had some good economic data.
Sure, I mean,
right?
it does. I mean, it also fits the picture of things being uneven. We were in a bit of a slowdown earlier in the summer. It does look like manufacturing's picking up. Had a good ISM figure today, well above expectations. 5.5-year low on weekly jobless claims, which is actually really important for the S&P. There's a really strong correlation.
You're the man with the good chart, so let's pull that up.
There's a really strong correlation between
ISM,
which is really strong. I'll talk about that in a second, but there's a real strong correlation. If you invert weekly jobless claims and overlay it on a graph of the S&P 500, you say they move very much together. The
I think
S&P
we can
follows.
do that. Take a
yeah,
look right
yeah, it does. It looks. You can see how closely correlated they are. Very important indicator for the stock market, weekly jobless claims. But back to ISM, there was a hidden nugget of not the greatest news here. The inflation figure in here, prices paid, was actually contractionary, below 50. That again goes back to the thesis of the Fed really beginning for the first time to voice concerns about disinflationary pressures.
Right.
That's a problem. Their target's 2%. We're nowhere near 2%.
All right. So the bond market actually not quite sure what to make of this, right?
Right. They're conflicted. We saw a late rally in bonds yesterday, brought yields down by about 11 basis points at the end of the day, where the bond market kind of also embraced the notion that the Fed's not going to taper, and then it got a little disrupted this morning by those strong, by the strong data, and we're back up to about 2.7%. So it could be, a combination. Yesterday might have been a little short covering, coming back on. I think in balance, you're going to see a drift higher in 10-year yields. Probably not up to 3% all the way, but probably somewhere in a range between 250 and 280 over the next 3 months, and well past the September meeting.
Very quickly, last question, because we have the all-important jobs report tomorrow. Looking in your crystal ball, next week, are we kind of smooth sailing with the markets? What do you think?
Well, there's not a lot of big data into the next week. Tomorrow's an important figure. We're looking for somewhere in the neighborhood of 180 to 200,000 on payrolls, which is about where we've been running for the last couple of months. There's very low event risk that it could go above that. You never know, but it's a low probability that we could see much above that. But looking into next week, there's really not. We get some Fed speakers. They'll be jawboning about the meeting just yesterday. Yeah. But not a lot on the radar, really.
All right, Dan Burns, thank you so much.
All right, see you, Lisa.
All right, we're going to move now and talk to Nadia Damouni. And is this what, the Dell and the Restless as the Dell turns? The soap opera
That's awesome.
for Dell
right.
keeps going on. Tomorrow is the vote. Finally, we think, yes. What is the latest on taking this private?
It's a great question, Lisa. Tomorrow is the 3rd time that they're trying to hold this vote for the Dell leverage buyout. Now, what we understand from our story we wrote last night is that it's very unlikely that they're going to adjourn this vote. Okay. They're going to go to the vote tomorrow with the 1365 offer, which was the original offer.
Right.
Given that 1375 is still somewhat, hasn't been agreed by Michael Dell and Silver Lake that they are not going to be able to change the voting rights. So now what the special committee has put on the table is, Michael, we're willing to go with 1375 if you accept that we don't amend the voting rights, but we extend the record date. So unfortunately, what we heard last night was that Michael Dell and Silver Lake are not prepared to accept that. So they will go to the vote tomorrow with the original deal.
But you have some news about the potential swing votes, that shareholders who have abstained, right?
That's correct. So under the old voting terms, those shareholders that abstained are considered that they're voting no against the deal. So Michael Dell knows that under the original voting terms, he will never get this leverage buyout. It will never pass the test. So what we understand now is a couple of the top 20 shareholders that have abstained have approached special committee and said to them, listen, actually, we will take the 1375. We don't mind that it doesn't have a voting right change or a change in a record date. We'll take it tomorrow, but just give it to us. So that could be in favor of Michael Dell. So there could be, this may not save the deal, Lisa,
right,
but there is a silver lining.
Interesting. All right. Dell shares are up today, I believe,
That's
about
right.
2.5% or so.
Yes, that's right. I mean,
Okay.
there is optimism in the market that perhaps Michael Dell and Silver Lake at the very last minute will accept the special committee's request not to change the voting rights.
All right.
So we'll see.
You've been all over it. All
you.
right. Thanks so much for the latest. And now, on Guestapalooza, we're going to talk to Chitra Nabat, and you're going to tell us about, we've seen, obviously, mobile, social sites. We saw big numbers come out of, they put the pedal to the metal over at Facebook here. What are we seeing today, first with Yelp? Is this permeating the whole sector here?
You talk about Facebook, right? Last week, Facebook is setting the bar, showing that a company knows how to understand mobile and make money off of it.
Right.
Yelp, the same thing. They had a significant growth in mobile. Actually, about 60% of their users are now using mobile. The second thing driving Yelp is more local businesses advertising and putting those advertising dollars on mobile. 40% of local ads on the mobile space. So Yelp is a company that's showing, you know, when you think about it, you're out in your neighborhood, right? You're looking for restaurants or you're looking for products and services. You're using your mobile device.
Sure.
Companies are now shifting to the mobile and embracing advertising there.
Stock is up huge today, if we can show that, based on their earnings, and huge spike. There you go. Also, let's talk about Trulia and Zillow. I mean, there's a mobile theme here. Trulia's up. I mean, it seems like, you know, you figure out where to go for your restaurants, buy your house, and then you're on your mobile and you use Yelp to find your restaurants. Fill us in on Trulia and Zillow.
It's all about online companies, right? So with Trulia and Zillow, housing market's up, so more inventory is listing online.
Yeah.
People are out in their neighborhoods. They want that information real time. Zillow actually is now classifying themselves as a mobile company.
Interesting.
Where you're out in your neighborhood, you can find an agent real time, texting. They want the immediacy of that information coming to you. And so it's about moving at the speed of life, or the new speed and intensity of life. So both of those companies capitalizing on mobile.
Both up today, although I know Zillow doesn't report until next week. But a company that did look at the huge spike again with Trulia today, their earnings, and bringing Zillow up with it as well. Let's preview LinkedIn. They report after the bell. I don't really consider this much of a social media site, more of a jobs market. But again, don't underestimate them with mobile, right?
That's the shift, actually, both mobile as well as LinkedIn. Right now, they're putting a lot of investment in new products and services so they could shift users from just viewing them as a job search tool to more of a social media platform and information site, because they want you to spend more time online as well as on your mobile device. LinkedIn has actually been criticized for not having enough user engagement. This is one of the tactics that they're using. Analysts today are expecting revenues to come in maybe at about $354 million. And so user engagement is up year over year. People are spending about 44% more minutes on the site. So let's see if that translates into revenues.
All right, I'm sure you'll have more on all this later on Tequity. That does it for us here at Trading at Noon. Remember, follow us on Twitter at Reuters Insider. Get more great videos, Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.